Good afternoon, ladies and gentlemen. In today's lesson, we are going to continue to examine price behavior and in particular slippage and requotes. Let's start with the underpinnings. What is slippage? Slippage is when your order is executed at a worse than expected price, i.e., you wish to buy at a certain price, but your order is executed at a bit higher price, and vice versa if to speak about selling. In its turn, a requote is a repeat request of a broker to execute an order at a new price. For example, you wish to buy at a certain price, the price grows sharply, and the broker asks you if you are still interested in buying at the new price that is dramatically different from the one you have requested before. Also, remember that you can buy only if there is a seller. If there is no seller at a certain price and you are planning to buy, there won't be any trade to conclude. And the other way around, you may sell only if there is a buyer. So you may sell at a certain price only if there is someone who agrees to buy at your price. Now let's delve into the mechanism of slippage, why it occurs and what it means. Let's suppose that we are dealing with a certain price rise. Buyers are buying and respectively sellers agree to sell at these prices. So we see that there are sellers at the prices of 1.08 and 1.09. Thus, the buyers are interested in buying from those sellers, and in this way they are pushing the price up. Let's say you want to enter the market at 1.10. The price reaches this value, and it turns out that there aren't any sellers at this price. You want to buy at 1.10, but there isn't any single seller at 1.10, so you enter the market with a market order, i.e. at the current price, but you are going to buy from the nearest seller. But if the nearest seller is at the price of 1.11, despite you wish to buy at 1.10, your order will be executed at 1.11, just because there is no seller at the price you wish to buy at. The sellers are at 1.11, and your order will be executed at the level where the sellers are. That's why slippage occurs. Let's examine an example of why slippage occurs when stop losses are triggered. Let's suppose there is a price movement, and according to your trading strategy, you go long, buy, and have a stop loss, for example at the nearest price minimum. So your stop loss is placed at 1.09. Let's suppose that the price has moved against you, and the nearest buyer is only at 1.08. As we remember, a stop loss for an order to buy represents selling. So to close your buy trade, you will need to sell. Thus, your stop loss is just your wish to sell at the price of 1.09. Since the closest buyer is at 1.08, you simply cannot sell at 1.09. Just because there is no one to buy from you at this price. So despite your wish to close the trade at 1.09, the market conditions imply that the best price for you to close the trade is at 1.08, because the nearest buyer is at this price. So your stop loss will be executed at 1.08 instead of 1.09. In this way, you will have to deal with slippage. Now let's examine the requote mechanism. Basically, it is almost the same as slippage, just a bit larger scale. Let's say there is a price movement, and according to your trading strategy, you are going to buy again. You see that the price has stopped at 1.09, i.e. you understand that there may be sellers at this price from whom you can buy. So, if a news item is released at this moment, you understand that during news releases, sharp price movements may occur, which happens just because sellers who wish to sell at some closest prices just move their orders a bit further to not have a huge loss, because everyone understands that during news releases a price may fluctuate sharply in unpredictable directions. So despite your wish to buy at 1.09, since you sent your request to the broker, the price may have risen dramatically, for example. Why this happen? Because there won't be any sellers at 1.09, 1.10, 1.11 or even at 1.12. Despite your wish to buy at 1.09, there aren't any sellers at this price or at the nearest prices. The nearest sellers is, for example, only at 1.13. Since it is a very large price gap as compared to your initial price of your request, the broker sends you a request to know if you still wish to conclude a trade at a new price according to new market conditions, because your initial request cannot be satisfied under the conditions you have requested earlier. If you confirm your wish, your order is executed at the current market price available, i.e. at 1.13. Stop losses work just the same here. When there is a price movement, there is a buy entry point, for example, and there is a stop loss, and when you buy, a stop loss means selling, i.e. exit from a long trade. And when the price moves against you and we see again that an important news item is released, it can happen again that there aren't any buyers at 1.10 or at 1.09, and the nearest buyer is only at 1.08. Thus, your initial request formed by a stop loss at 1.10 simply cannot be satisfied according to the market conditions, because there aren't any buyers who would be ready to buy your sale at 1.10, and your sales are your stop loss. Thus, we get a very powerful price movement till the nearest buyer at 1.08. Even we've placed a stop loss at 1.10, it cannot be executed at this price, because there is no buyer. And the closest possible price for executing your stop loss is at 1.08. It is the price at which the closest buyer is located. So when market conditions change, the broker sends you a request to know if the price that is extremely different from the one you requested in your stop loss suits you. That's to say, the current price is 1.08. Your price is 1.10. If you accept the new price of 1.08, you confirm the request. If you accept a retracement, you decline the request. To sum up, slippage is when your order is executed at a price that is a bit different from the one at which you wanted your order to be executed. A requote is a broker's request to execute your order at a price which is very different from the one you requested according to market conditions. That's all for now. I hope this lesson has been useful. All the best and happy trading!